The stock market sank after the U.S. Federal Reserve cuts interest rates for the third time this year. Inflation in the United Kingdom rises to the highest in 8 months amid economic uncertainty, and the Democratic Republic of the Congo has filed a legal case against Apple in France, accusing the tech giant of complicity in illegal mining conflicts. Hello, I'm Jafar Hasnan with the latest business and finance news here on TRT World. Asian stocks and currencies fell on Thursday amid a broader market sell-off following the U.S. Federal Reserve's rate cut decision. South Korean equities led losses, with the won falling to its lowest level in 15 years. The Kospi and Kosdaq were both down by around 1.65%. Meanwhile, Japan's Nikkei fell as much as 1% in response to the central bank's move to keep rates unchanged at 0.25%. Wall Street sank around 3% after the Federal Open Market Committee reduced the benchmark rate to a range of 4.25 to 4.5%. It is the third cut in a row. While the cut was widely anticipated, the Fed halved its rates outlook for 2025, lowering it from the 4 cuts in its previous forecast. For more on this, let's bring in Terence Hove, Senior Financial Market Strategist at XNES. Great to have you here with us on TRT World. So this was certainly something that was widely expected. So what do you think would be the potential impact of this?
Yeah, thank you for having me on the show, Jeffrey. I think, as you mentioned, it's now the outlook for 2025 that has now been lowered in terms of how deep the cuts are going to go going into 2025. Especially, that the 25 basis points cut that was announced yesterday was widely expected. However, the inflation outlook is now what's becoming a major concern, and the Fed is getting closer to the terminal rate, although inflation has been remaining stubbornly high. But now with the new or incoming president and former president Donald J. Trump's presidency, there's a lot of concern that the inflation outlook is quite inflationary, and that's where the concerns are. And I think that's what's also spooked the markets as well in the comments that the U.S. Fed Chair Jerome Powell made.
And it seems to me policymakers are still concerned about lingering inflation. So how much of that has got to do with Donald Trump's upcoming Trump?
Yeah, quite a lot, quite significant. And I think the buzzword that's been going around has been the Trump trade. And since the election, we've seen, how much the markets have rallied considerably. Now, the policymakers are now concerned on that inflation outlook because a lot of analysts and market participants are anticipating that President Donald Trump's second term is going to be very good for business. But what's different now is that he's coming in at a time where inflation is high compared to his previous term where inflation is low. So a lot of his policies are anticipated to be quite inflationary as well. So I think that also had quite a bit to do with the interest rate cut and nearing the terminal rate, and probably less interest rate cuts going into 2025.
Terence Hove, thanks very much for joining me here on TRT World. Really appreciate your taking out the time. Just a day before the Bank of England meets to discuss interest rates, the United Kingdom has unveiled its latest inflation data. In the UK, inflation surged to 2.6% in the year to November, marking the second consecutive monthly increase. This was not just a rise, it was the fastest rise in prices since March. The reasons behind the inflation surge were easy to spot but hard to solve. Petrol prices rose sharply, making every commute or delivery more expensive. Grocery prices, meanwhile, climbed, forcing shoppers to spend more on staples. Adding to this mix was a tobacco duty hike announced in the budget, which made life even pricier for those affected. The rise in inflation came against a backdrop of economic fragility. The British economy had shown signs of an unexpected slowdown, a development that complicated the BOE's task. Inflation remained above the central bank's target, creating a dilemma for policymakers who now face growing pressure to keep interest rates steady despite declining GDP. Meanwhile, across the Channel, Europe faces its own battle with inflation, though with less severity. The Eurozone's annual consumer inflation rate for November was revised to a more modest 2.2%, while the pressures were similar. The overall economic picture in Europe remained more stable than in the United Kingdom. All right, for more on this, let's bring in Vicky Price. She joins me from London. She's a board member at the Centre for Economics and Business Research. Great to have you here with us on TRT World. So what were the main drivers behind this recent surge in inflation, and what does it mean for the economy and consumers?
It's interesting because you did mention that there was an increase in fuel costs, so motorists had to pay a bit more, so grocery prices, as you rightly said, and of course a number of measures in the budget that we had on October the 30th, which of course took effect almost straight away. And that is the issue, because it's not necessarily excess consumer demand that's done it. Even though wages have been rising in faster than inflation for some time now, and we got some data for that earlier in the week as well. It is really forces which any interest rate increases or cuts aren't really going to have much impact on. They are external issues which the government can't really affect quite significantly. So the worry is that nevertheless that the policymakers who are meeting today, the Bank of England policymakers, are going to decide to not change interest rates because that inflation has gone up, which is going to be a real blow to consumers, those who are borrowing for houses, for businesses, which have been expecting interest rate cuts to come much faster than they have done so far. So it's a bit of a concern as to what sort of reactions you get from central banks from things which are not necessarily suggesting at all that you have a booming economy that needs high interest rates. In fact, the opposite is the case.
And Vicky, are rising petrol, grocery costs and tobacco duty hikes, are they temporary or a long-term challenge?
Well, on the motor fuel costs, of course, we don't know because there's geopolitics around, and what's going to happen exactly, we have no idea necessarily from day to day, given all the uncertainty that exists in the Middle East in particular. But generally, I think the expectation is that oil prices are not going to rise significantly. We have indeed Trump, and I think you mentioned that in your previous interview, who has said he wants to see the US drill, which means that there will be more supply of oil around. So the general forecasts are that certainly energy costs aren't going to be rising significantly. So that's one positive looking ahead. And if you look at the Bank of England's own forecast, and also it's interesting to see what the Fed has now done, revising what it expected for 2025. But Bank of England forecast suggests that inflation is likely to stay very close to target over the next 2 to 3 years. That suggests really that they're not expecting any serious sort of danger coming from petrol prices.
The picture across Europe is more stable than in the United Kingdom. So what can the UK learn from Europe's approach to inflation management?
It depends what you mean about stable. It is true that inflation hasn't gone up as much on average in Europe. And what we've seen, of course, is that the ECB, the European Central Bank, has cut interest rates and cut them actually more aggressively than many others. Remember, it raised interest rates at last, if you compare them with the US and the UK, and it started bringing them down first, which has been good news for the European economy because, of course, it has had all these other headwinds that have hit it, such as the war in Ukraine, which has affected Germany in particular. Cheaper gas imports are a thing of the past from Russia. So there have been issues there, and some countries are not doing very well at all, such as Germany, which is still worrying about having a recession overall for the year as a whole, although things are improving a little bit, but industrial production is still in the doldrums. And so on the inflation front, it is true that we're talking about a few sort of basis points differences between the various big regions of the world, and I don't think that's really telling us an awful lot, except that the European Central Bank feels a lot more confident about inflation perhaps moving and staying around target than perhaps the UK or the US, given the pronouncements from the Fed chairman yesterday.
Vicky Price, thanks very much for joining me here on TRT World. I really appreciate your taking out the time. Meanwhile, the UK government has outlined plans to create a clean electricity system by 2030 to help make Britain a green energy superpower. Tulay Kalyan explains.
Oh my. A dramatic rise in European energy prices, seen as a geopolitical weapon since the start of the Ukraine-Russia war. And to stop it, UK's Energy Secretary Ed Miliband has revealed a national plan to switch to sustainable electricity by 2030.
We are at the moment at the mercy of the roller coaster of fossil fuel markets. Gas prices, wherever we get the gas from, subject to the decisions of petrostates and dictators. And your viewers are seeing it in their energy bills, have been seeing it for years, particularly since Russia's invasion of Ukraine. It's time to actually have homegrown, clean energy that we can control.
The government is calling it an ambitious action plan for reaching 95% clean energy by 2030.
And every solar panel we put up, every wind turbine we build, every piece of infrastructure we build gives us more security and gets us on that path to lower bills. And some people aren't going to like it, Naga. Some people aren't going to like, more wind turbines, for example, more solar panels. In a way, that's a choice we've got to make as a country. Do we stick to the old, insecure path with all of the dangers that I've outlined, or do we do something different? I say we do something different.
The goal of the plan is also to address the climate crisis, reduce costs, and generate jobs. 95% clean energy for 2030 sounds like a great plan, but critics warn it could push bills even higher. The industry has been calling for new projects for years and welcomed the plans. But the government says ministers will be given final say on approving large wind farms under decarbonization plan. Tülay Kalyon Haznedaroğlu, TRT World, London.
And now, a quick look at some other business stories from around the world. Germany has approved more than $20 billion for new military gear, including submarines and missile systems. Authorities called this Germany's largest defense package ever. Arms exports also exceeded $14 billion this year, with nearly $9 billion sent to Ukraine. Officials say the upgrades are crucial for Europe's security. The U.S. Supreme Court has agreed to hear TikTok's bid to block a law that would ban or force the sale of the platform over its links to China. The court will hear arguments in January to decide whether or not the law violates free speech rights. TikTok claims the law is an unprecedented restriction that would silence millions of U.S. users, but the government defends the ban as necessary for national security. New Zealand's economy has slipped into recession as business activity fell more than expected in the third quarter. GDP shrank 1% in the 3 months to September from the previous quarter, following a 1.1% fall in the April to June period. The data now cements the case for more aggressive interest rate cuts by the Reserve Bank of New Zealand. And the International Monetary Fund has approved a $1.4 billion loan program for El Salvador. The agreement follows commitments from the South American nation, including changes to its controversial Bitcoin policies and measures to reduce its fiscal deficit. In 2021, El Salvador became the first country to recognize Bitcoin as an official currency. The Democratic Republic of the Congo has launched a legal challenge against Apple subsidiaries in France, and Belgium. They accuse the tech giant of being complicit in the conflict minerals trade. The case highlights the tensions between corporate responsibility and the realities on the ground. Conflict minerals are natural resources extracted from conflict zones, notably in the Democratic Republic of the Congo. These include tin, tantalum, tungsten, and gold. Essential for electronics like smartphones and computers, their extraction often funds armed groups perpetuating violence and human rights abuses. Congo supplies over 15% of global tantalum, a mineral critical for tech devices. In 2024, rebels in Eastern Democratic Republic of the Congo generated around $300,000 monthly by taxing coltan production. The armed groups profit from mining operations using proceeds to fuel violence and fund weapons. This has resulted in millions of deaths and displacement. Apple claimed in its 2023 filing that no armed groups benefited from its mineral sourcing. Critics, however, have argued that its reliance on discredited schemes like ITSCI raises many questions about the integrity of its supply chain. The Congo's legal action highlights Belgium's historical exploitation of its resources during colonial rule. Lawyers argue that Belgium has a more obligation to address the ongoing crisis of Congo's minerals. Billions in mineral exports continue to fund conflicts linking past exploitation to current crises. All right, for more on this, I'm joined by Dubusi Wokolo. He's a managing partner and chief executive at Next Year. Great to have you here with us on TRT World. So first and foremost, how significant are Congo's 3T minerals to global tech industry, and why has this dependence become a source of conflict?
Thank you for having me. I think with about 15% of the global 3Ts, Congo is very significant in what the giant techs are doing in the world. So I think this is huge and this is very significant. But if you look at it both from a legal perspective and from a corporate social perspective as well, I think this case will test one of the world's way of trying to resolve issues. How is this going? To actually claim that there is no connection between what Apple is doing or Apple subsidiaries and the war in Congo is to be half, is to be telling a half truth, trying to be a bit economical with truth, because we all know that wherever there is mineral mines, the tendency that is linked to conflict is there. So that cannot be denied. But to outrightly say, that Apple is fueling it may not be actually very true. But there's a connection between the two. So if we look at it, I think the world will be looking at this case, looking at it from both a legal perspective, from a moral perspective, and from a social corporate responsible perspective.
Now, Debussy, let me ask you, do schemes like ITSCI truly address the traceability challenges of conflict minerals, or are they merely a facade for compliance?
So when we put most of these things, it doesn't mean that they're going to address it 100%, but you're trying to find a way to reduce the effect of it. It may not address it, so I wouldn't say that they will outrightly address it, but that's where the moral burden comes in, to try to do that which will help to start addressing it. You may not address it, but you need such scheme to see how you can mitigate the effect and see what you can do.
And with legal complaints filed in France and Belgium, what role do these nations play at ensuring corporate accountability for human rights violations in supply chains?
Yes, I think so. I think whoever advised DRC Congo to do that, it was a smart move, not just because of colonial linkage between Congo, DRC, and Belgium, but France, especially, that is trying to find a way to launder its image among its Francophone African country. So it was a good one. I think these two countries, knowing the overall global implication, will try to balance it between business to get justice for people. So it's going to be a very good one. But my feeling is that it may not just be a legal solution. They might try to start finding a way to get Apple to pay some compensation to DRC Congo.
Argentina has managed to exit from recession in the third quarter, growing more than expected despite challenges as industry slowed due to President Javier Milei's tough austerity measures. Signs of recovery are emerging as Argentina heads into 2025. South America's second largest economy grew by 3.9% from July to September compared to the previous quarter. This marked the first quarterly expansion since entering a technical recession in late 2023. But the road to recovery is not without its challenges. On a year-to-year basis, the economy has continued to struggle. In the third quarter, Argentina's GDP shrank by 2.1% compared to the same period last year. This marked the sixth consecutive quarter of contraction, showing that the recovery is still fragile. For now, Argentina holds on to hope that these positive signs will pave the way for a brighter future. So what is fueling this recovery? I mean, that's a big question, right? The key drivers have been capital expenditure, consumer spending, and exports helping to push the economy forward. However, public investment remained sluggish, showing only a modest rebound, which leaves room for further growth in the future. Meanwhile, Nigerian President Bola Tinubu has outlined a $28 billion budget for the next year, saying his aim is to stabilize the country's economy. Key priorities for 2025 include the economy, security, health, and education. Paulo David reports.
President Tinubu said the budget was aimed at tackling Nigeria's many challenges with a focus on boosting economic growth, cutting unemployment, and reducing poverty. He said the economy had grown by 3.5% in the third quarter of 2024, up from 2.5% in the same period last year.
The budget projects inflation will decline from the current rate of 34.6% to 15% next year, while the exchange rate will improve from approximately 1,700 naira per dollar to 1,500 naira.
But some Nigerians aren't convinced that much will change.
Budget from millions to waiting to billions to trillions and so on. We are just hearing figure. The budget, in fact, is not the presentation of budget, the effect of it. How are they implementing this budget?
Every day, many Nigerians struggle to make ends meet. Sadly, this has been worsened by rising food and household costs due to the country's economic policies, leaving many hungry.
This onions are buying 200 naira without bag. It's no longer funny. We are suffering. We are starving. People are dying. The country is very hard. See Christmas now. Everybody, nothing person feel buy.
The country's healthcare system is also struggling. Patients face inadequate facilities, limited services, and a severe shortage of experienced medical professionals.
We need improvements in this hospital. Please let them help us, please.
Some activists have lost hope and are taking matters into their own hands.
I got a small generator just to power the community, like their devices and what have you. If you look behind you, there's a connecting bridge. I constructed that. I tried to maintain the road also, and this is one of the best roads you find within the communities around.
As 2024 ends, Nigerians look to the 2025 budget with hope that it will drive effective revenue generation, debt management, and project execution, ultimately addressing inflation, exchange rate volatility, and improved living conditions nationwide. Paulo David, Charity World, Abuja.
You know, the next story kind of explains why my Amazon orders are not arriving on time. So your gifts might not arrive on time this year as well, as thousands of Amazon workers gear up for a strike during the critical final stretch of the holiday season. Warehouse workers and contract drivers at 7 Amazon locations across California, New York, Illinois, and Georgia are set to walk off the job today. The Teamsters Union, which represents 10,000 Amazon workers, says the strike aims to secure better wages and working conditions, putting pressure on the company during its busiest time of this year. Teamsters officials announced that local unions are also setting up picket lines of hundreds of Amazon fulfillment centers nationwide. However, the U.S. retail giant is reportedly not willing to come to the table to bargain, fearing it could pave the way for further union actions. Google search giant Google has had a tough 2024, facing legal challenges from the U.S. Department of Justice for creating a monopoly in the market and the unfair usage of artificial intelligence technologies, putting the tech giant on a bumpy road as the year comes to an end. Pinar Nishasta reports.
It is one of the most significant antitrust cases against a tech giant in a generation in the U.S. The U.S. Department of Justice, the DOJ, ordered that Google's parent company Alphabet sell its Chrome web browser last month after a landmark ruling found it had violated U.S. antitrust laws with its search business. Opened under the Trump administration in 2020, the case alleged that Google's tactics that made it the default search engine in Chrome as well as on iPhones and Android devices, were anti-competitive, shutting out smaller search engines in the market.
As alleged in our complaint, for 15 years, Google has pursued a course of anti-competitive conduct that has allowed it to halt the rise of rival technologies, manipulate auction mechanics to insulate itself from competition, and force advertisers and publishers to use its tools. In so doing, Google has engaged in exclusionary conduct to severely weaken, if not destroy, competition in the ad tech industry.
If approved, the penalties could potentially disrupt the tight integration among many of Google's key products and services. The tech giant has promised to appeal. The DOJ also suggested ending exclusive agreements in which Google pays billions of dollars annually to Apple and other device makers to make its search engine the default on their tablets and smartphones.
Most people think of Google as a search engine, but Google has a number of businesses, and one of the businesses is the software that is kind of the plumbing for all online advertising. So the software that newspapers use to manage their inventory, the software that advertisers use to buy advertising on that inventory, the matching engine for those two things, the data that you can append to make your advertising more targeted. So the plumbing for internet advertising that's outside of search. In this case, is addressing that portion of Google's business. It's about a $30 billion a year business.
As the year comes to a close, Google must feel the weight of its case bearing down. And while it's appealing, it will have a second case to deal with, one involving AI, which itself may be the controversy of the century. Punarni Shasta, TRT World.
And that's all your business news for now. Thank you very much for watching. The Newsmakers is coming up next.